This is the Savvy Investor radio show and podcast. For help with your retirement, schedule a 15-minute phone conversation with the team at ProStatus Financial Advisors today. Just call 866-597-1040 and at thesavvyinvestorradio.com.
A recent Fidelity survey found that nearly 3/4, 72% of current retirees wish they had opened a Roth IRA earlier in their careers. They said that they missed out on the tax-free growth and the withdrawals. If we want to learn a lesson from that, well, we talk about the traditional IRA to Roth conversions, but I think it takes a delicate hand here. How difficult is it, and what are the benefits of actually doing these conversions?
Well, Chris, before we go there, I just want to add something to the last segment we had. We were talking about creating income streams, and Ryan was talking about one of the advantages of working with us is that we actually show you the options how to create your income streams, right? Because there's more than one way to do it. And I've mentioned this before, as a phase 2 fiduciary, somebody who is looking out for this part of your life, the person who helped get you into your 60s when you're ready to retire, their approach, I always equate it to going to a doctor, right? When you're young, you worked with a pediatrician, and that pediatrician probably did a really great job until you're about 18 years old. And then you started going to a family doctor. But at some point, you transition from a family doctor into specialists that focus just on you as you get older, because our needs as we get older from a medical point of view are different, just like our needs from a financial planning point of view are different as we get older. So as a phase 2 fiduciary, the second half of our life, we're looking at things a little different. And one of the things that we want to look at, just like Ryan was talking about, is making sure that you understand the options on how you're going to create the income stream and how much of the risk of running out of money do you want to retain yourself. Warren Buffett has said it a bazillion times. Everybody's heard this quote. The number one rule in investment is never run out of money. And the number 2 rule in investment is always remember rule number 1.
That's right.
So as you're going into retirement, thinking about how am I going to create those income streams, you want to create the income streams transferring as much of the risk of running out of money to somebody else as possible. Just like you insure your house, just like you insure your automobile, at some point you insured your life. Does it make sense to insure your retirement income stream for you and your spouse? And it may actually be a good idea for you, but it's also important that you know your choices, which is why when you sit down with us, we show you all the options you have for creating the income stream. And, and I know you talked about it, Ryan, but I just thought it was worth repeating and emphasizing the fact that when you're sitting down with a financial planner, make sure that they are a phase 2 fiduciary and that they understand the choices that you have on how to create your income streams, because there's more than one option, and you need to know how much money am I going to need to commit to it, how much flexibility I'm going to have, and who's actually taking the risk of me never running out of money during retirement. And if you want to have that conversation, pick up the phone, give us a call at 866-597-1040, 866-597-1040. Sit down with Ryan, myself, and our team. We will show you how to create income streams you will never outlive. We're going to talk to you about how much you're paying in fees. We're going to talk to you about how much risk you're taking, long-term care, estate planning, and taxes. Pick up the phone, give us a call at 866-597-1040.
866-597-1040. You can also go online to the website, schedule that call right there at thesavvyinvestorradio.com. Just a click a button, look at the calendar, find a time that works conveniently for you, set that up, thesavvyinvestorradio.com. If you save $500,000 or more towards your retirement and you're over 55 and serious about your retirement and you want to make sure that you're doing the right things, set up a time to speak with this team at ProStatus Financial, thesavvyinvestorradio.com, or give a call 866-597-1040. Let's talk taxes though right now, because, we talked about the markets earlier. People worried about the fluctuation there, but negating taxes in retirement, or that's money that you're paying that, unlike the market, is never going to come back. So how do we make the tax code work in our favor?
Well, it's really about working with an advisor who understands the tax code, who understands all the implications of what goes on, because everything that you do with the market, everything you do with your investment accounts, whether they're IRA accounts or non-IRA accounts, they ultimately have an effect on your tax return at some point. And that's one of the big things that we really try to focus on here at ProStatus is, it's great that advisors focus on growing the money as much as possible, but nobody ever focuses on distributing the money and doing it as tax efficiently as possible, because the name of the game for for most financial advisors is accumulate as many assets as they can underneath them. And that's what a phase one advisor is. They just really focus on that first phase of your investment life, your retirement life, is grow the money, grow. That way, I have as much assets as I can underneath me as management. I get charged my fee on it, and I live a comfortable lifestyle. Not many advisors focus on distributing the money out to their clients and doing it in the most tax efficient way.
I would actually argue most of them are not allowed to. If you work with one of those big box stores, if you work for one of those companies that you see commercials for, or their name is on the side of a building or maybe on a stadium of some sort, if you look at the statements, they actually say, "Don't talk to us about taxes." It makes no sense to Ryan and myself. It makes no sense to our team. How is it that somebody can give you investment advice and not understand the very tax implications of that advice they're giving? If somebody walked into our office, Ryan, and you know this as well as I do, if somebody walked into our office and said, "Hey, I'm interested in an investment that I'm going to lose 20 to 30% of my income off of every single year," who says, "Ooh, pick me, I want that investment"? That's insane.
It's funny you mentioned that. Just last week, we do taxes. Obviously, taxes are a huge part. So we do the tax returns for all of our financial planning clients. We do taxes for a large number of people who are not our investment or financial planning clients. They just come to us for taxes. And I was sitting down with one of my clients, been coming to me for a number of years. And every time somebody takes a large distribution from their IRA or their 401k, I always question, hey, what'd you do with this money? Because I want to make sure that I'm coding it correctly, whether they did whether it was rolled over, it was done via 60-day rollover, they cashed it in. And I'm sitting down with this gentleman. I say to him, I see that you had an IRA distribution of $170,000 out of your IRA. And I see you sent off about $20,000 to the Fed and about $10,000 to the state. But tell me, what did we do with this money? Why'd you take this money out? Because as far as I was concerned, I knew what his income needs were. I knew he didn't need the money. So I was curious as to what he was doing with it. And he said, well, I was working with this one advisor, and I was kind of unhappy with the returns that I was getting. So I went to my bank and I told them I had this money in an account and I wanted to do better. And so they cashed it in. I said, okay, they cashed in your IRA. He said, yeah, they cashed in my IRA, and then they put me into an annuity with it. And I said, okay. So they took money out of the IRA, right? Yeah, they took money out of my IRA and they made you pay tax on it. Yes. And I said, so you were unhappy with the returns from the other advisor because you were losing money in your IRA, yet you went to this other quote unquote advisor at the bank and they took all the money out of the IRA and made you pay 30% taxes. That's losing money there.
Yeah.
And he said, well, I didn't think of it that way. They told me I'm going to get better returns in this annuity. I said, okay, that may be the case. You might get better returns inside of this annuity than you were with that previous advisor. But what they've also done is they took money that was ordinary income, because any money you have inside of IRAs or 401ks, when you take it out, you put it in your pocket, it's ordinary income. And then they took that money and they put it into an annuity. Well, you could take that IRA and just move it over directly into the annuity and still have all 170,000. Now you have 140. Okay, I get that. I said, but now what they've done is there's a rule when it comes to annuities. If you take non-IRA money and put it into an annuity, any gains that are made on it are taxed at ordinary income rates. Whether it is short-term or long-term, it's taxed at ordinary income rates. Under normal circumstances, had he just had this money sitting in a checking account and invested into the market and left it in there for over a year, it would be capital gains rates, which are much more favorable rates. So not only has this new advisor taken money out of your IRA, made you pay ordinary income tax on it, but then put that same money back into this annuity, and instead of giving you favorable tax rates by giving you long-term capital gains rates, they've switched it back to ordinary income rates again on all of your gains. And he kind of looked at me with this, dumbstruck look on his face. And he said, well, how come they didn't explain that to me? And I said, well, because if you look at the bottom of the statement that they're going to give you, right at the bottom, it says, do not consult us for tax advice. All of this could have been avoided. And I reminded him, we've been working together for a number of years. You know what I do for a living. We manage assets for our clients. I've talked to you about this before. All this could have been avoided with you just picking up the phone and calling me and said, hey, Ryan, what's your opinion on this? Or what do you think about this?
But we didn't buy him dinner.
Nah, that's true. Yeah, he didn't, he didn't get one of my dinner seminar invites like he got from this person. He worked for a bank, a really large, they work for a bank, really large bank. So, you want to have an advisor who understands the tax code because they just caused taxes to get him to where they wanted his money to be for them to make money. And now when he goes to stick money out again, he's going to pay taxes again. It's not quite double taxation, but it's probably as pretty close to it as you can get. And it all would have been avoided if he just picked up the phone and called me at 866-597-1040, 866-597-1040. If you're talking with your advisor and you're asking them those tax questions, or if you're talking with your CPA, your tax person, you're saying, hey, does a Roth conversion make sense for me? And you're not getting a straight yes or no answer, give us a call. 866-597-1040, 866-597-1040. Sit down with Mike, myself, and our team, and we'll go over our very own tax plan and conversion plan with you. If you don't want to call us, you just, you want to do it without picking up the phone, you go to our website, thesavvyinvestorradio.com. That's thesavvyinvestorradio.com. Right there at the top, it says schedule my call. You do it without ever having to pick up the phone. That's thesavvyinvestorradio.com.
Or if you prefer, you can give a call. It's 866-597-1040. It's 866-597-1040. Online, as Ryan said there, thesavvyinvestorradio.com. There is a tax planning analysis a little bit further down on the front page there where you can develop that time, start developing that tax strategy. Tax season, as you guys are very well aware, is just wrapping up, and I had to write a check, as I do every year, to Uncle Sam. And when I did that, I didn't end it by going, I feel real patriotic right now. I feel great. I'm glad I did this. It is not your patriotic duty to pay more in taxes than necessary, but so many people do it every single day because they don't know any better. That is what you guys do, is to help them know better, understand better, and pay as little as possible.
Chris, you just made a very, very important statement there. The fact is that most people do not understand that paying tax is an optional exercise. Mm-hmm. Now, I'm not saying you can avoid taxes. I'm not saying that the government doesn't have the right to tax you. What I'm saying is that you can arrange your financial affairs in such a manner to pay the least amount of taxes legally possible, which includes the 0% tax bracket. And so, when you're selling a business, if you're selling a business and you're going to have a capital gain, why would you pay taxes? You spent so much time and energy and emotional energy, love. I mean, it's like one of your children, and yet you're going to lose 20 to 30% to taxes when you sell it. And you have that choice. You can choose not to pay that tax by structuring the sale correctly. If you're selling real estate, you can choose not to pay the tax by structuring it correctly. Heck, if you have a bunch of stocks and you want to avoid paying tax on them, you pick up the phone and you can choose whether to pay tax on the sale of those stocks. Even though there's a huge gain in there, we can show you how to eliminate, reduce, possibly to the 0% tax bracket. I can't tell you how many clients have come to us, how many people have come to us through the radio, the television, online. The bulk of our clients are structured in such a way that they're always paying the least amount of taxes legally possible. And lots of our clients are in the six-figure income paying 0% taxes, but you can't get there by just hoping for the best. Yes, Roth conversions are a good idea. Yes, contributing to a Roth IRA or Roth 401k makes sense, but it's so much more than that. Tax planning is exactly what it sounds like. Planning. Pick up the phone, give us a call, 866-597-1040, 866-597-1040. Sit down with Ryan, myself, and our team, and let us create a plan for you. A plan for your income, a plan for how much risk you're taking, a plan for the fees you're paying, a plan for long-term care, for estate planning, and for taxes. Pick up the phone, 866-597-1040.
866-597-1040 is how you set up a time to speak with Ryan, Mike, the entire team at ProStatus Financial. 866-597-1040. If you don't want to make that call right now, you still want to get on their calendar, go to thesavvyinvestorradio.com. There's a link right there on the front page. You can click through, take a couple minutes, set up a time to speak with them, because it's not just about the market when it comes to retirement. It's not just about estate planning when it comes to retirement. It's not just about taxes when it comes to retirement. It's all these things and more, and negating one or the other could really undo the entire plan. So if you've saved $500,000 or more towards your retirement, fantastic. You've done a great job. The next step, of course, is figuring out how to make those retirement accounts into that retirement plan. That is where Mike, Ryan, the team come into play. 866-597-1040. Start developing that strategy, or go online to the website. That is thesavvyinvestorradio.com. As always, we want to thank you for joining us here on the show. Really do appreciate you taking the time. Hope you have a great week ahead of you. But before we wrap up, Mike, Ryan, I want to leave you guys with a final word.
This is Ryan Herbert. Thank you so much for listening to the Savvy Investor Radio Show and podcast.
This is Mike Canet. We'll see you, the Savvy Investor, next week.
Advisory services offered through ProStatus Financial Advisors Group, a registered investment advisor. Insurance licensed in Maryland. ProStatus Financial Advisors Group, LLC is not licensed in all 50 states. To find out if ProStatus Financial Advisors Group is licensed in your state, please call 410-863-1040. ProStatus Group, LLC is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through representatives of ProStatus Financial Advisors Group.